In this video I am going to show you two free websites that you can use to track smart money, whales or entities, or however you kids call it these days. And this is very interesting because you want to trade with the big money together with the whales and the smart money, because it's nice if you have a couple of thousand to trade with, but of course you are not going to move price. So who is moving price? Those are those bigger whales, those bigger entities. And if you know how they are moving, you can just trade together with them and you can ride the wave to the upside, to the downside. If you like the content, guys, do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. Without further ado, let's start diving in. And I'm going to show you a few examples by using the BTC chart. The first free website that I'm talking about is called DeFi Llama, and no, that is not a joke, it's really called DeFi Llama. I will try to put a link in the description so you guys can just use it there. This is how the website looks like once you enter it, and then you need to click on SEC Transparency, and then please use the Binance chart. Binance is the biggest exchange, has most amount of volume, and that is also how the whales or the smart money will move their assets. So you want to look at where do I see the most amount of volume. Again, we're using Binance. Then we're clicking on USD inflows, and I want to take the orange part out. And now I am going to zoom in a little bit. Now you only see these blue bars. I hope it is visible on your screen. If you're watching this on your phone, then please tilt it so that you can see it. And you have these bars, and these bars show you the net in and outflow of USDT on the Binance exchange. So for example, once you see a big bar to the downside, that means that the net in or outflow, in this case outflow for the day, was negative. So there was more money leaving the exchange than it was put on the exchange. And of course, when the bar is on the upside, it means that there is a lot of money flowing into the exchange. Why is that important? Well, if people put money on the exchange, they don't do that for fun. They do that because they want to buy assets, mostly Bitcoin, Ethereum, or one of the other majors. So they are interested in buying, and you're not buying to make a loss. You're buying because you think it is cheap or it's a good opportunity, and therefore usually price goes up. And of course, once money is leaving the exchange, the smart money is thinking, I think price is going to go down, and they are parking their money on other places, for example on the ledger, which is transferring to other assets. I'm going to give you a few examples. The first one that you see here, I put an arrow here, and we're looking here at the 8 hour. This is a nice time frame for the examples. Right here in approximately 13 or 14 of November 2024, that was right here at the bottom, and then you can see the price after that was moving to the upside. And look at what we see here. This bar that I'm showing you right here, you can see a net inflow of 2.5 billion exactly on 13 of November. So that's exactly, that's exactly here once we had that last small dump, and then we had the move to the upside. So it was before the move to the upside. Let me give you another example. Here we're looking at 17 and 18 of December, and you're seeing an outflow here. So the bars are at the bottom. It's quite large, 1.6 billion and a bit more than 1 billion. 16 and 17. Look at that, exactly at the top, and then you see price traveling to the downside. Absolute perfection. Here I have another one for you. This is 30th of December 2024. Let's see, right here, the big bar, 30th of December 2024. Now that looks super nice, and it so far it plays out pretty nicely, but it is not exact science. For example, you can also see here the price here is moving quite extensively to the upside from approximately 92 all the way to approximately 110. And what did we see at the beginning? So that was about 13 or 14 of January, and then I'm looking here, 13 or 14 January, there was pretty much nothing. There was not a very clear in or outflow, so there was not a signal here to say, hey, we are going to go much higher. But how is this then possible? Well, it is not always driven by fresh buys or sells, but sometimes this could also just be liquidations. And that means that people maybe put the stop loss somewhere here, and then eventually price moves higher and then just liquidates all of these traders, and then eventually price moves higher. That's not 100%, not a guarantee. I haven't looked at it, but I just find it important to show you that not every move to the upside and to the downside is given here on the website. And I'm also not saying if you see that right away yank in a long or short because we're going up or down, but it is a very nice indicator. And if you can see this exactly at the beginning of the move, then you can already start anticipating and placing longs or short orders until eventually the move is over. So this is a very, very nice tool. Now, talking about those liquidations, that is the second website that I'm going to show you. Important is that you understand that if you want to buy, someone else needs to sell, and if someone else needs to sell, then only you can buy. So there's always a mechanism. For every buyer there's a seller, for every seller there's a buyer. The second website I want to show you is the liquidation heat map. Very, very most likely you have seen this coming by on social media, but this is so many times misunderstood or misinterpreted that people have no idea how to read it or how to use it. You can find this on the website of coinglass.com. If you just Google CoinGlass liquidation heat map, already pops up. And guess what? Also here we're using the Binance chart because this has a very high trading volume and therefore is very accurate. Well, simply put, if you see here the yellow part, that means there are liquidations, and the higher the yellow part, the brighter the yellow part, the higher the liquidations. You can also see that here. So purple, dark purple here is absolutely zero, and all the way to the top is 52 million, but that is only what you're seeing right here. Here you can move the time frame, and now we're only looking at 12 hours, so the small time frame. You can see that we have some liquidations right here above, and we have some liquidations right at the bottom. If I stop moving my mouse, you can see that was 48 million at the bottom, and then we have something here at 40 million and something slightly up at 52 million, and not all of the liquidity has been taken. That could mean two things. We're still going up one more time to take a liquidity before we're going down, or we're traveling now down because there's not a whole lot of incentive anymore to go higher. How do you need to read that with the liquidity and being liquidated? I already said if someone wants to buy, someone else needs to sell, etc., etc. But if you are a market maker and you want to push price higher, will you do that from this point or will you do that somewhere from this point? Of course you're going to do that from the lows. So if the market maker is able to push price lower, they want to fill up their bags somewhere in the bottom to then eventually travel it to the upside, start selling the bags there again, and start loading the short positions again, because they want to short from the highs and they want to long from the lows. And that is how they're trying to move and manipulate price. And of course you can only do that once you have a lot of buyers and sellers, because if there is no one here in the chart, if there are no liquidations, it's very hard to move price here. What if you then move price here, but there is no one eventually to fill your bags on? It doesn't make any sense. So with the liquidation heat map, you can see where are there a lot of liquidations. Okay, if we have established that by just looking at the chart, like I said, I just showed you, then eventually we can say, okay, now let's start moving price to one direction to liquidate as many traders as we can to then pick up that liquidity, again, buying versus selling, selling versus buying, to then move price. Now I zoomed out to the 1 month, and here you can see the price all the way up to 110k, and you can see in general here at the bottom there are actually not a whole lot of liquidations left. Could price move lower? Yes, of course, absolutely. But the incentive for the market maker, for the wheels, for the institutions to pick up liquidity and to wreck the most amount of traders is to the upside. Because look here at a price of 109,000. I just showed you only quote unquote 40 million of liquidations, but here we're talking about 180 million of liquidations, and this is 170 million liquidations, very close to each other, 109,900, and this one is 109,500. And imagine this is only on the Binance BTC USDT chart. So you can also maybe combine this with the Bybit chart or maybe Coinbase or whatever, but usually traders move in pretty much the same kind of direction. So very, very likely that if you use a different exchange, also BTC USDT, that for Bybit there are also a lot of liquidations right here on the top. So this works very nicely to create a bias for yourself together with the in and out flow here of USDT on exchanges. I do have to say there's only one downside about about this chart or the way to read or interpret it, and that is that this is dynamic. That means that some people started to short here at the top. Congratulations if they took the short, but their stop loss is right there where you see the bright yellow. But if they start closing out their position, let's say they are doing it in the area where we are right now, then that bright yellow that you saw here on the top is going to disappear, and maybe there is just market buys for the sells that they have here. So eventually this chart can clear up and it will change. For example, if I zoom back in again on the 12 hour, I know 100% sure that the liquidation that I just showed you here at these two levels, 95 and 97, they were not there approximately a week ago, although price is going sideways here. That has been created in the last day, maybe 2 days maximum. So by picking up the liquidation, you can also see that that bright yellow is then eventually disappearing. And eventually it can also pop up again if people start building up positions. And that is a lot of times exactly what you see happening. You have a move down like this, a lot of people get liquidated, the chart is completely clean, and then because price is going sideways, liquidations are being built up on both sides. So don't try to long into the liquidation and say, we're gonna hit that first, I'm going to long and I'm gonna take the profit, or I'm going to short. Wait until price hits one of the two liquidation levels and then take the trade to the other side. So if we're now traveling down, we're taking liquidity from the bottom, try to take a long and trade it to the upside with the idea of hitting the liquidations to the top. Then of course again, what are you doing? You're longing the bottom and later on you're trying to short the top. It is that easy. Guys, if you like the content, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. Thank you so much. See you in the next one. Bye bye.